In today's video, we are going to take a look at the legendary company GameStop and evaluate how good of a buy the company actually is, how high or low the price might go in the future, and last but not least, what I think is going to happen from here on out with the stock market and brokerages. This video is a little bit different from my usual video, so keep in mind that the following is my opinion and is going to focus less on the usual due diligence, which I usually go about. GameStop, which was founded in 1996, operates a network of brick-and-mortar gaming retail stores, as well as an online shop that supplements these exact stores. Here they sell new and pre-owned video games, accessories, and everything a gamer would ever need. Usually this would to some extent contribute to the market cap of the company. With the market cap of GameStop however sitting at around about 21 billion, I think it is safe to say that this is only partially the reason. But let's stick to the facts for now and take a look at the revenue, which to some extent plays into the valuation of GameStop as well. For the last fiscal year, this sat at about 6.4 billion, which can be considered quite sizable for a business that big media considered to be dead. However, let's break that revenue down a little bit further, so we can see what may drive our champ going forward. The biggest revenue generator for GameStop in the last fiscal year was the software product segment, with about 3 billion in revenue. This is then followed by 2.7 billion in hardware and accessoire sales, which you can expect to jump in the next fiscal year due to the release of the next-gen consoles. Last but not least, we then still have the collectibles, which contribute an also sizable 737 million to the overall revenue of GameStop. However, since big media has repeatedly stated that GameStop is a stock near bankruptcy, let's dig into that a little bit further, as I would have to state the opposite of that. GameStop's total assets sat at about 2.6 billion US dollars in their third quarter report from October of 2020. These were made up by about 333 million in equity, 1.1 billion in financial debt, and 1.1 billion in non-interest paying capital. To now figure out the whole debt situation, which obviously is an important thing for GameStop, we subtract the cash position of 445.9 million from the company's financial debt. This leaves us with a net debt of 693.1 million, with which we would usually be able to calculate the sustainability factor. Since the EBITDA for GameStop so far in this year, however, has been negative, this does not quite work out. However, don't rush to conclusions, as historically the fourth quarter tends to be the best performing one and it could still be a deal breaker. But to already somewhat sum up the financial state of GameStop, it can be said that this company is, in my opinion, nowhere near bankruptcy. Sure, it's not an Apple-type balance sheet, but no one expects it to be. Therefore, I would have to say that all the buzz behind the weak financials is a kind of meh argument. Sure, there are some things that point to a balance sheet which isn't perfect. However, it's nowhere near bankruptcy, and I cannot repeat that enough. Usually, I would go into way more detail on all of the financials behind the company. However, let's not pretend like these are the reason why most of us are buying the stock. But since I know you're all wondering where GameStop is actually going, here's the sum up of where GameStop might be heading. First of all, it is safe to say that in order for GameStop to succeed in the long run, the company has quite a big task in front of it. Yes, the usual brick and mortar retail stores are on a downwards trend, you can't deny that. Yes, the financial position of GameStop isn't magnificent, but the case of GameStop is actually quite real. First of all, with the activist investor Ryan Cohen, who is the co-founder of Chewy, the case for transition into a gaming e-commerce powerhouse actually looks quite feasible to me. And if GameStop manages to maybe even get some exclusive deals going for themselves, I sincerely think they are going to be in a very comfortable position. However, I think this will not be the only change we will see in the business model of GameStop, as I think the company is going to implement huge changes to their overall business model in general. Yes, closing down sound stores will probably be a part of that. But to say it right away, you guys have done something incredible by actually allowing the company to make their change possible from a financial point of view. As through the increasing stock price, they are now in a very comfortable position to use financing options if stuff hits the fan. But where's GameStop going? Well, at first I'm expecting it to go to the moon. After that statement, however, has been made, I would expect GameStop stock to hover around the $35 range in the long run, depending on how well their transition goes. If it goes well and GameStop becomes the powerhouse, which some expect it to be, I would even say that something around the $45 mark is quite possible. Keep in mind though that there are risks involved in their transition. So if you should sell in the future, make sure to spend some of your profits over at GameStop. However, I think that if people will hold forever, which is unlikely, but it's possible, this stock might actually become a powerhouse in terms of its stock. Alright, when it comes to my personal opinion on the whole situation, I find it incredibly sad how some are trying to discredit what is happening as a few kids manipulating the market. In all honesty, I think the market manipulation is done by those trying to block buy orders on shares or those trying to spread false information in general. I know there are liquidity and technical problems involved in all of this, but if you want to fix these, you should simply hold both sides of the trade and not restrict one of them. I'm a huge advocate for free speech and everyone having their own opinion. But it must be said that changing the rules of a game because you lose or someone doesn't have the same opinion is something that is done in grade school. Calling for regulations just because you lose isn't the way to go. I mean, if I YOLO'd my money on margin into something and lost, the opposite party would also come after me. And I have to be honest. Although GameStop didn't pay me the best price for my Nintendo Pokemon games, I personally don't think that they deserve to be run out of business. I actually have quite fond memories of going there with my dad when I was younger and picking up some new games. And I sincerely think I'm not the only one that feels like this. As for the most of us, GameStop was actually quite a big part of our youth. However, no matter what side you are on, we can all be sure that the outcome of this is going to change the finance industry for years to come. Not only in regards to the reputation of some of the parties involved in all of this, but surely it will also change how the market behaves for decades. Now, it's up to you. On which side of the story are you going to be? I can, however, say that although I do not own a position in GameStop, sadly, I support Wall Street bets. Not only is it a thing that has given me a lot of joy for a really long time, but I think this is actually a really good cause. Make them pay for what they did to a lot of our parents in '08 and '09. This was Might As Well Invest, and I'll see you in the next one.